Hi friends, welcome to SNCA Study Club, a platform for CA final students. Hello dears, we are moving towards the practice manual question number 6. While commencing the statutory audit of B Company Limited, the auditor undertook the risk assessment and found that the detection risk relating to certain class of transactions cannot be reduced to acceptable level. So it is mainly stating that A, who is a chartered accountant who has been accepted the audit engagement of a company, he is doing what risk assessment procedure. He obtained the conclusion that he can't reduce the detection risk up to a with respect to certain level of transaction to acceptable level. This is the question. So what should be the answer of this? The problem is that he can't reduce detection risk to up to acceptable level. First of all, you should answer what are to be done by an auditor, or what are the points that is to be considered by an auditor to reduce the detection risk. And then if he is not in a position to reduce it, what should be done by the auditor? So which is the standard that is mainly with respect of identification of risk and auditor's response to that risk? I have already provided the details, essay 315 and essay 330. So first of all, the answer should be begin with essay name. Essay 315, identifying and assessing the risk of material misstatement by understanding the entity and its environment. So this is what essay 315. Essay 330, response to assess the risk of material misstatement, right? Essay 330. So then after indicating the name, we should determine or we should provide the details with respect of the standard. What is requiring the standard or what is provided in the standard? So essay 315, essay 330, establish what standards for what? On procedures to be followed to obtain an understanding of accounting, internal control system, risk and its components. Where an auditor is auditing an entity, he should obtain what? Information with respect of the accounting, internal control system, risk, and as well as all the components of all this. So essay 315 is mainly provides what? Standards. For what? The procedures to understand this. Okay, so essay 315 and essay 330 establish certain standards on the procedures to be followed to obtain what? Understanding of the accounting, internal control system, risk and its components. It means that he is the auditor. He want to understand with respect of the accounting, internal control system, risk and risk etc. So he have to apply what? Certain procedures for the purpose of obtaining the information. So while following this procedure, what should he consider? That is providing in this standard. What are the matters or what are the standards that is to be considered by the concerned auditor? So essay 315 and as well as essay 330 requiring the auditor, that is requiring the auditor to exercise what? To exercise professional judgment while assessing the risk of material misstatement at the accession level or at the financial statement level, and to respond towards the assessed risk of material misstatement. That is essay 315 stating that for the purpose of identifying the risk of material misstatement, you should use your professional judgment. Okay, the concerned auditor has used the same, and thereafter the essay 330 state that now you obtain information with respect of what? Existing risk of material misstatement. You have to respond. While responding, okay, the auditor telling that I will respond. Then essay 330 state that while responding toward that assessed risk of material misstatement, you should use your professional judgment. What? You should use your professional judgment. So essay 315 stating that you should use professional judgment while assessing the risk of material misstatement, and essay 330 state that you should use your professional judgment while respond towards that assessed risk of material misstatement. Okay. So now we discussed with respect of what? Risk, assessed risk, response, etc. Then what is the problem here? Detection risk. What is the detection risk or what is mean by the detection risk? It is a situation where auditor is not able to detect the misstatement. What detection risk means? Auditor's substantive procedure. Auditor is performing what substantive procedures for the purpose of collecting audit evidence, and that substantive procedure is not able to detect the misstatement. These misstatement can be either in account balance, class of transaction, disclosure, which may be material or not material. That is, detection risk may be material or may not material. So auditor have to apply substantive procedure to reduce what? Detection risk. In the given case, it has been stated that what inherent. One minute, I have to again check the question. 1 minute, friends. Wait 1 minute. Yeah, it has been stated that auditor is not able to reduce to an acceptable level, right? Then, risk of material misstatement. When risk of material misstatement will happen in an organization, it is because where the inherent risk is very high, control risk is high. If inherent risk is existing in an organization and control risk is existing in an organization, automatically risk of material misstatement will be exist, right? It means that we know what is inherent risk because of not having what an organizational internal control system. Control risk means exists control, internal control, but not operating efficiently and effectively. So, detection risk means it is because of what? Sampling risk or non-sampling risk. Sampling risk means auditor applying sampling procedure, that is giving a conclusion which is different from the conclusion that is to be arrived from the population. Non-sampling risk means it is because of inappropriate audit procedure. Because of that, what? Detection risk will arise. Detection risk means auditor is not in a position to detect the risk of material misstatement. Detect the risk of misstatement. It can be material or not material. So, it has been stated that where risk of material misstatement is high, auditor should perform, auditor have to obtain more audit evidence. For getting more audit evidence, auditor have to apply what? More audit procedure. This is not, in that case, there is not required to exercise that much of professional judgment. It is common sense. That is, if there is more risk of material misstatement, more audit evidence required. For more audit evidence, more audit procedure. So here what is happening? Auditor is telling that he can't reduce the detection risk to an acceptable level. It may be because of the inappropriate audit procedure or sampling risk, right? Then, where inherent risk and control risk is high, auditor should determine whether substantive procedure provides sufficient and appropriate audit evidence to reduce detection risk. That is, it has been already provided or it has been already identified by the auditor by using what or as per SA 315 there exists what? Inherent risk and as well as control risk. So automatically there is a chance of detection risk because auditor may not be able to detect that risk of material misstatement. In that case, auditor should determine, before applying the audit procedure, should determine whether the subsequent procedure is enough or adequate to reduce detection risk. That is, whether the substantive procedure is adequate to obtain sufficient and appropriate audit evidence for the purpose of reducing the detection risk. It means that where auditor get more evidence, auditor can use that evidence or that information for the purpose of reducing the risk of material misstatement. So for that purpose, auditor have to apply what? More procedure. So audit procedure include what? Test of control and substantive procedure. Here we are telling about the substantive procedure. Auditor have to determine whether the substantive procedure is adequate to obtain audit evidence and to reduce what? Detection risk. Then, for the purpose of determining that also, auditor have to use what? Professional judgment. That is, auditor should use or exercise professional judgment to determine the audit procedure. For what? To reduce the detection risk to an acceptable level. Okay. If auditor, even after applying this audit procedure, may not be in a position so as to reduce this detection risk, they have only one solution that is available to the auditor: issue qualified audit report or disclaimer of opinion. I hope you understand actually what is meant by this question, right? So first of all, this question is stating that auditor is not able to reduce the risk of material or detection risk to an acceptable level. First of all, you should indicate SA number, SA name, SA 315 and 330, and then indicate the requirement of the standard. It is mainly established what standard on procedures to be applied for the purpose of obtaining an understanding of the accounting and internal control system risk and as well as its components. So before applying the audit procedure, auditor should use his professional judgment for the purpose of both SA 315 and 330, that is professional judgment to identify, assess the risk of material misstatement and to respond towards that risk of material misstatement. Then auditor should determine whether his substantive procedure is adequate to reduce the detection risk. Before that, explain what is detection risk, why detection risk is arising. Then last, auditor should use his professional judgment to apply audit procedure for what? To reduce the detection risk. If auditor is not in a position to reduce that detection risk, even after applying what? Adequate audit procedure, he may issue qualification to the audit report or disclaim the audit report. This is the answer of 6A. Actually, we have discussed this answer after going through SA 330 and as well as 350. You should hear that class, that is SA 315 and 330. I have provided the procedures that is to be followed by the auditor for getting understanding and as well as for responding appropriately. So after hearing that, I am sure that you may get an idea with respect of the answer. You should read one or more time the answer and then you may able to understand what is actually mean by this. While seeing the question, actually we may not be in a position to what is actually mean, what is the expected answer by the examiner, because in auditing there is a chance of coming these types of questions where we may not able to understand what is the question actually means. So you should read the question, understand the concept, then reading not one time or two time, you should read until you understand. This is my policy. You should follow this and I think that you may understand. Actually, I have taken the essay and thereafter I am explaining the question. So sometimes or few people may not be able to understand what is actually meant in this essay, but they can get the idea by understanding this answer, right? That essay is mainly nothing, or it is nothing, it is only stating that what should be done by an auditor to assess the risk of material misstatement and what should be done by an auditor to respond towards that risk of material misstatement. We are moving towards the next question. Okay, we are moving towards 6B question, which is stating that while auditing accounts of a public limited company for the year 31st March 2015, an auditor found out an error in the valuation of inventory which affect the financial statement materially. Comment. So it is mainly stating that auditor appointed to conduct the audit of financial statement plus found an error in valuation of inventory affecting the financial statement material. So it may be what? Error or fraud. So indicate what? SA 240. Auditor's responsibility in respect of fraud in a financial statement. So what is happening here? Errors in valuation of inventory. We have to answer what is the auditor's responsibility with respect of this. First of all, indicate SA 240. SA 240 state that where an auditor identify any circumstances that is indicating any fraud or error, auditor should determine the potential effect it's on in the financial statement. That is, if auditor identifying any circumstances, this is also indicating the possibility of fraud or error. In that case, auditor should determine its possible potential effect on the potential effects on the financial statement. That is, determine whether it is material to the financial statement or not. That is, whether it is lead to material misstatement or misstatement in financial statement. Then, at the same time, auditor is believing that suspected fraud, here it is not sure, it may be because of fraud or error, it is known as what? Suspected fraud. So if the auditor believes that suspected fraud is material, it means if the auditor believes that suspected fraud is having material effect on the financial statement, what he has to do? He may apply additional audit procedure, or he may make some modification to the audit procedure. It means that nature, timing, extent. That is, he may make some changes to the nature, timing, extent of the audit procedure, or he may use additional audit procedure. for the purpose of determining whether it is material or not. If it is material, what is the effect in the financial statement, etc., or whether it is lead to any misstatement, etc. Absolutely, error in valuation inventory, it will absolutely lead to what? Material misstatement in the financial statement. If it is undervaluation, it may what? Undervaluation of closing stock, profit may be affected and the balance sheet position will be already affected. We know that. Okay, then so determine whether it will lead to misstatement. It will absolutely lead to what? Misstatement. So if auditor identify that any misstatement, whether it is, sorry, 1 minute friends. That is, if the auditor identify any misstatement, it can be fraud or it may not be fraud. It may be because of error. So auditor have to require the management. Auditor should require the management to adjust that financial information. That is to make changes. It has been already the overvaluation has happened or undervaluation has happened. You should adjust the same. And at the same time, auditor may also extend the audit procedure. They may have certain circumstances in which auditor is required to determine whether it is fraud or as well as error. So in that case, if auditor identifying any misstatement which may not fraud, in that case he should communicate with the management to make changes or adjustment in the financial information, and as well as he may also require to make some extension to the audit procedure, or he may require to make some additional audit procedure, or he may require to make some changes in the audit procedure. Plus, if the management may accept, management may tell, yeah, you are right, I will make some such changes, but at the same time, in that case no problem. But if the management is refusing to incorporate that, or auditor is not able to conclude whether it is material or not, that is two cases where management is refusing to incorporate what? Such financial information, that is such error or fraud, or auditor is not in a position to determine whether that misstatement is material or not. In that case, auditor have only on two solutions: qualification to the audit report or adverse report. First of all, he should determine whether it is fraud or error. He may require to apply additional audit procedure, then communicate with the management. If the management is not incorporating that, or if the auditor is not in a position to determine whether it is material or not, auditor may issue qualification to the audit report or adverse audit report. In the present case, first of all, auditor should communicate the same with respect of that misstatement to the management. In this case, auditor has detected the misstatement. Auditor identified and auditor detected that misstatement through the audit procedure. So he should communicate with the management, plus he should apply additional audit procedure. If even after applying that additional audit procedure, if he is not in a position to determine its material impact on the financial information, or if the auditor is having even after, or if the management is not incorporating that changes to the financial statement, auditor may issue qualifications to the audit report. I hope you understand what is meant in question 6b. Okay.